Welcome to this week's live ASX strategy session. Thank you for joining me. Great to have you with me for another edition of the strategy sessions. Lots of interesting stuff to go through today. Bit of movement in the markets, plenty of movement going on in some of the commodities. Got some stocks to look at, lots of Q&A from you, I hope, lots of stock codes we can go through. And yeah, it should be a pretty interesting show. Now, as always, everything today is general commentary only, doesn't take your personal situation into account. So I've got the ASX 200 up here on the screen, and 1 week on, and the ASX 200, it's actually little change from where it was last week. I think the question to consider here is whether this is a market that's starting to roll over, or is there simply a pause before higher levels. The US market is, of course, an important influence to all this. I'm going to go over and look at that in a moment, but let's just start here with the ASX 200. And because the thing here with this is there are actually some competing forces at work within the index, and that's what I want to have a look at now, because it does all look quite calm on the surface, but there's actually quite a bit going on internally. So I'm just going to jump away from this chart for a moment. I'll come back to this in a sec, but let's start with the financials. So this is the ASX 200 financials. This is actually an ETF, which tracks the index, and it is at an all-time high. This has really been leading the way for the local market. And the leading stock within the financial sector has been CBA, which, not surprisingly, is also at an all-time high. Really interesting. CBA didn't do much for a couple of years. You can see this big range-bound period that it was in. Then it broke high in January this year, and it's been in a strong trending phase since then. And I often talk about big ranges. And the interesting thing with the big range is that a big range, when it breaks, it can be to the upside, can be to the downside. But when a big range breaks, it often leads to a large move. And this is a great example of how that can play out. CBA actually gave its 10th buy signal this week, and that's through Motion Trader's multi-motion service. So there have been 10 entry points in this stock over the last few years. Interestingly, the first signal was back down here in November 2020 at around 74. You can see it had moved from below the moving averages to above, trigger a signal. And this is a thing when you use a wide trailing stop loss. The wide stop was able to see off this period of consolidation, collect the dividends along the way, and it's still in there now within this upward trend. And this is a thing when you follow trends, you use wide stops. I think it really is a tried and tested approach, and it can lead to big gains, while at the same time being able to manage your risk when things do eventually turn down. And interesting thing with all-time highs, whether we're looking at CBA or an index or whatever it may be, people worry. They worry about all-time highs, and they worry that the run must be nearing an end. And yes, at some point, an all-time high will be the final high, but we don't know which one that's going to be. So in the meantime, the odds just favour that an all-time high will lead to more all-time highs. That's how trends work. That's been the case with CBA over the course of this year. At this stage, the financials is the financial index. At this stage, they continue to underpin the local market, and it really is currently the driving force and the underpinning factor. The other side to the ASX is the materials. It's the two financials and materials make up the bulk of the ASX 200. Having a look at materials, and this is the competing force. This is the other side of the story. It's been in a big range. Materials have been in a big range for nearly 3 years. You can just see it here. Let me just mark that in. And really, it's been a time where it's just oscillated either side of these moving averages. really is a big range bound market. And last week, I was talking about this last week, and I was saying, let me just take that range off for the moment. And last week, I was talking about this rally we'd had off the September low, really strong rally from below the averages to above. The pullback looked very much corrective in its structure. I thought this could have been the launching pad for a move up towards the top of the range, but that hasn't played out. The support around the moving averages has given way this week, and we've got a sharp decline. And I was optimistic about the pullback leading to, as I say, that retest of the top of the range, but not at this point. I think that the sharp move lower through the week, it really leaves the materials neither in a bullish nor bearish position. It really is now just stuck well and truly within a range. So it's not really helping the ASX 200 much at all. And this week's fall in the materials has really been the drag on the ASX 200. Financials are hitting new all-time highs. Materials are pulling back. ASX 200 is really where it was last week. So you got those two balancing one another out. Coming back to the ASX 200, I think given the weakness in the materials sector, I think it's a positive the ASX 200 has been able to maintain around these levels from last week. Last week, I was talking about the potential of several weeks of consolidation following the October high, and nothing's really changed since then. The ASX 200, it just doesn't look like it's ready to move higher at this point in time. I think we could see prices come back towards the 50 or probably maybe even the 100-day moving average. And that could be all part of the developing range. Like I can just draw something in. Like, we could see sort of price action that resembles something like so, where we just get that several more weeks of sideways consolidation. And then from there, perhaps that provides the platform to then push higher from. That's one way this could play out. Of course, we could see other scenarios. We could get more of a zigzag scenario where prices pull back further. But that would be my favoured play, that we get that sideways consolidation that does go on for a bit longer yet. And we often get that. We often get that sort of price action within bullish trends. Also notice how prices have pulled back to the top of the, what I'll also do, let me just duck away from this. I actually also want to have a look at, the equal weight, because that gives us some interesting information as well. So just jumping over the equal weight, and this is still constructive. The price action here is still constructive. The market put on about 10% from its September lows, strong rally. And often when you get these strong rallies, it's normal to get a pullback. Completely normal to see the market pull back towards the moving averages, which it has done. Looking at the structure, the moving averages, the 50 and the 100-day moving averages, they're still rising. Prices are above those moving averages. So I think from that, we can say that the trend remains bullish, and the pullback is finding support around the 50-day moving average. So I think that's a positive. And again, this is something we often see in those bullish trends. Also notice how prices have pulled back towards the top of this previous range. So for around, I think it was around 5 months, the market traded within this sideways range. We got the breakout. Market has initially run. Profit taking comes in. Prices pull back and retreat back to the previous breakout point. That's the way these things often work. The test is, does fresh buying come back in now on the pullback and give us that buy the dip? So far, there appears to be it appears to be the case that the market is finding support. The key now is, can we see another rally? after maybe some more consolidation. And just jumping back, just what I was talking about there with ranges, we get breakouts, we get pullbacks. Just quickly on that CBA example, look how this played out. There's the range, the breakout, the pullback, and then the rally. I think something similar could happen here with the equal weight, and of course, would then also expect to see something similar happening in the ASX 200. We don't know if the equal weight's going to follow that same path, but that's the way I'm looking at this at the moment. If this breakout fails, well, then we've got risk management strategies to protect capital. But at this point, I think we should be looking for more consolidation, maybe over the next several weeks, but still looking at this through an optimistic viewpoint, with the idea that this can continue higher in the maybe as we head into mid-December. Now, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. It shows YouTube you're watching. YouTube shows other people. Helps me a lot. So please do that. So let's jump over to the US market. Have a look at what that's been doing through the week. And after that, we've also got the US small caps, the local small caps, as well as the commodities to have a look at. But first of all, the S&P 500. Now, this is where I think things get interesting. We've got the initial post-election rally off the 50-day moving average. That's taken the S&P 500 to a new all-time high. Now we've got the pause and the pullback has begun. So I think what's important about this is how much interest is there in buying the dip. And this is important because if this rally was all about froth and hype, then prices could quickly retreat back to pre-election levels. But if there's money waiting to get into the market, then I'd expect this pullback to be modest, and for the S&P to hold on to most of its gains, and really have that buying underpin prices on a pullback. I think it's a similar story when we look at the other indices, like look at the Dow, look at the NASDAQ, look at the S&P 500 equal weight. They've all got the same basic structure. So the key is now what happens on this pullback. One of the things we can do, we can put on a Fibonacci indicator, and that gives us a bit of a guideline. So we can measure that from the recent lows to the highs. And so a pullback somewhere within this green zone, this Fibonacci retracement zone, would be proportional to the rally. To the extent of the rally we had, it'd be normal to see a pullback somewhere within this region. Also, that coincides with the top of this price gap. So prices gapped after the election, and so the top of a gap will often provide an area of support. So that Fibonacci region is right where this support level would also come in. So I think it's quite an important level to watch. Just a word on these Fibonacci retracements. I don't use them to trade off, but they can help frame our expectations in terms of where a pullback could come to. I think simply having an idea of what could happen helps us mentally prepare for the scenarios that we can encounter in the markets as the days and the weeks progress. And you can also put Fibonacci's just to see how they worked in the past, just on these other recent advances and pullbacks. So you do the Fibonacci of that advance, it came back to around 50%. And then we can look at this advance a couple of months ago, again rallied, came back to the top of the fib region. So look, they're interesting, they're useful. As I say, I don't trade off them, but just having an idea of the proportion of a pullback can be a useful guide. And what could happen here? It could be a case that the market trades sideways towards the upper end of the Fibonacci region. Moving averages catch up. It could be a case of a sideways move while the averages move higher. So it's just one way this could play out if it's indeed to stay bullish. I think from a trend perspective, it's a case of, again, those rising moving averages, the 50 and 100-day moving averages, price being above the averages. And I think while this remains the underlying condition, I think the play here is to stay long the market and give the prevailing upward trend the benefit of the doubt. So for me, it's not about trying to pick a top in the market. Rather, it's about trying to stay on a big trend for as long as possible. And then when I do that, I know that I'm always going to give back some profit at the end. And that's okay. And that's the price of maximizing time on a large trend, that you give some back at the end. I think that the big money's made by being optimistic that these trends can extend higher, not being pessimistic and thinking, oh, look, maybe this is close to an end. The money's made by staying on trends, not trying to pick the end of them. And as always, the key, I think, again, is have that good risk management, have that exit strategy in mind, and that's what keeps you in the game long after a trend ends. Now, I'm going to jump to the small caps, US and local, the commodities. I've got stocks to talk about, questions from you. But of course, that wraps up the free section of the strategy session. So if you want to get more, there's a whole lot more to talk about. I'd love to have you come along. Link below, click that, come in. You get the recorded version, of course, not the live, but then you get the live next week. So that would be great to have you going forward as a strategy session member. Okay, so let's go over to the Russell, the US small caps.